Welcome to the Cashflow Academy Podcast. I'm your host, Andy Tanner. This is where we make investing fun, simple, and real. And today I'm excited for this guest. We have the author of Bitcoin Age, Layered Money. Nik Bhatia is with us. So Nik, thanks for being with us.
Andy, thank you so much for having me.
This will be a lot of fun. Just a reminder as we get going, like, subscribe, hit your notification bell. And we always have free stuff at yourinvestingclass.com. So go to yourinvestingclass.com. Got some great stuff there designed for people who haven't really gotten where they want to be in investing and want to get a primer to start with, a launching pad. And part of that is learning about assets. So one of the big things is Bitcoin. It's huge, huge prices. I think I bought my first Bitcoin for $300. And I bought it because I was curious, and I thought, well, best way to learn it, there's a $300 lesson. If it goes down, I just learned something for $300. And I kind of was figuring out wallets and all the different places you could go to trade it and all this. And I opened up. It was hard for me to learn how to open up. So I opened up about 4 or 5 different places trying to buy a Bitcoin. This is back when it was $300. And so I went out and I bought one. I bought one Bitcoin. And just to see what the experience was like. I kind of forgot about it. And so time went on, and then someone in a Facebook feed or something said it hit 10,000 for the first time. And I told my wife, I go, I think I bought one of those. I think. So it's like looking for, pocket change in the couch. Did I lose some money in the couch? And lo and behold, I did find it and got the encryption, the password, and I started writing. I switched it over to a different place and started writing options on it, the same way I do with stocks. And I started selling puts to get paid to buy it cheaper. And it's just kind of been a weird ride since then. So that's my background and my limited experience with Bitcoin. I still have crypto. But I don't have $1 million of crypto. I don't have like 20 coins or anything like that. But it is something that I think is worth the conversation. So with that, give us a little bit of your background quickly and why you wrote the book and why you think people, I know you're very excited and passionate to get this book in people's hands. It's a genuine passion. Tell us a little bit about your background and why people should check this book out. Why'd you write it?
Sure, Andy. So you've been a Bitcoiner longer than I have, I will admit. I came into this space around 2016 when the price was just below $1,000. So I was on a trading desk at the time. So I was trading U.S. Treasuries for a large asset manager on the buy side.
Interesting.
And so my background is in traditional finance. It's in asset management and specifically fixed income. So I'm a bond trader by nature. And that was my industry for, almost a decade. And in that role as a bond trader, I became, and actually even before I got on a trading desk for the first time, I was always fascinated about money. I was captivated by the Fed's QE programs in the early 2010s when I was a finance student. And I could see in front of my eyes that the financial system was highly manipulated by money creation, central bank and banking money creation. And so that has been my focus of research and study and passion since being an economics and finance student all the way back to college. And midway through my career as a fixed income trader, I would stumble upon Bitcoin articles. Obviously, the prices, on the financial websites, but I never made that journey. I never took that curious first step until 2016. One report or email that came across my desk, it sparked a light bulb, and I said, I have to understand what Bitcoin is now. And so that was 2016, read the first couple books, a bunch of articles, and I said, this is something for me. And from that point on, I transitioned away from a bond trader role to a Bitcoin and global macro researcher and someone who just wanted to write about Bitcoin through the lens of a bond trader and someone that, have seen treasuries, T-bills, repo, money markets. That's really that I was, before I was the head treasuries trader at the firm, I was just a lowly cash trader trading repo and T-bills and agency discount notes for money market fund vehicles. And so I, as a Fed watcher and someone that, is very passionate about the money markets, I wanted to explain Bitcoin. I thought I understood it in a way that not many bond traders understood it. I understood it more in a way that the technologists were understanding it, but coming from that bond trader angle. So that's my background, Andy. That's where I come from. I started writing about Bitcoin in 2018. My first book, Layered Money, in 2021, and this new book called Bitcoin Age just released this year in 2025.
Just a compliment to the credibility of your background, or at least the way I see it when I listen to you, is a lot of people don't understand the money market industry, in that if I'm a stock trader and an option trader, which I am, I want to have a place to put cash where I feel like that cash will be worth the same amount tomorrow as today. In other words, if I were to put $1,000 in the money market and the next day it was only worth $999, I'd have a massive issue with that. That's your place. But if you have a money market and you're the guy that takes that money, that's a liability to you. I mean, you owe me that money, and how are you going to make cash? So they need assets that have very, 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 very high probability of being successful and no risk. And the reverse repo market can offer that because it's a Federal Reserve place. The treasuries can offer that. And it's interesting because when you see the threat of breaking the buck, which is when that money market is threatened, those reverse repos and those treasuries are very, very important assets. And to me, it speaks to your insight into it, because you're like, we're printing money out of nothing. And so instead of having a net worth issue, you have a net wealth issue where I have $1,000 and 5 years later I still have $1,000, but my buying power is down 20%. And so your background speaks. I resonate with that, where you would be interested in the evolution of money. And we used to have feathers, and we used to have beads and fish and rocks and trade bacon and eggs with each other. And a lot of people said in 1971, when we went off the gold standard, that cash stopped being money. But a person could equally argue, no, actually gold stopped being money because we stopped using it. And so this idea of decentralized, I think DeFi is bigger than just the potential to remove middlemen with blockchain technology is a formidable idea, akin perhaps to the internet replacing the travel agent. We just don't need them. We don't need a travel agent. I can go peer to peer with Delta without an intermediary. I see no reason for a bank to find out the algorithms for what is a good risk to loan money. I don't see a purpose for a brokerage. I mean, you could go peer to peer in a lot of stuff. So it's DeFi is exciting, crypto is exciting. What's a Bitcoin for those that still don't know?
Yes. So Bitcoin it's a decentralized network, as you describe, much like the internet. You don't need a bank to send money. I think one of the things that prevents people from taking that first leap into Bitcoin is they believe that it's a made up or a virtual currency. And while it is digital in nature, it's ones and zeros, it does have an intrinsic value to the people that own it. The reason that it has intrinsic value is that the decentralization, the way that the network spreads the information out across the world and across network participants is a slow-moving process that prevents anybody from controlling it. And in that slow-moving process is secured by trillions and trillions of calculations. That's called Bitcoin mining at all times. And so when people struggle with what is the intrinsic value, it's a network with a supply that is known, And that supply is upheld by all these calculations, and they're happening around the world by different parties so that nobody can control. So nobody can print new Bitcoin outside of the schedule. And that schedule is locked in. It has been since the beginning of the network. And that's what people refer to as 21 million maximum supply. There are already almost 20 million of those coins already in existence. So basically what you have is this digital gold, this scarce coin that can't be printed and can't be created by any party.
So the way I would describe its intrinsic value, and what you described is the reason I bought one way back when for one reason. Number one, I wanted to learn, and the best way to learn something is to just do it. So you start doing stuff, and if I made a mistake, I lose $300. As an option trader, I know maximum risk is premium paid. So if I pay $100 for an option, that's the worst I can do, and let's have some fun. But the second reason, as you mentioned, there's only 21 million of them. And I thought, well, there's less than 21, or there's more than 21 million millionaires in the world. So if this does get intrinsic value, there'll be millionaires that can't have one, possibly. So I thought, okay, I'll buy one and see what happens. And if it comes to the point where a millionaire can't get one, I'll have one. And I think the intrinsic value of anything simply becomes just the eye of the beholder. It's demand. It's trust. If someone stops trusting gold, we see gold go up and down all the time based on whether people value it or trust it. And right now, Bitcoin is someone trusted. We used to trust tulips. We used to trust through history, all kinds of stuff we've trusted. And when people stop trusting it, they stop using it. As long as they trust it, it's valuable. Let me throw some. So let me tell you what I like about it. And then I'll try to throw you some hard balls, and you'll probably hit them over the fence. I doubt I would stymie the guy who literally wrote the book on the subject, and I'm not that type of guy to try to stymie. But I think I'm just going to try to feed you some of the skepticisms I have and that I've had other people have. But first of all, the positives, the idea that you could have something that is truly free market. I'm sort of a libertarian at heart. I'm really not a formal one. I don't declare myself as any party, but I resonate a lot with the idea of, hey, government, get the heck out of the way and just let things work. Just let free market work. And I very much like the idea of decentralization. I love the idea of a public ledger, a ledger that is rechecked and re-verified globally. I love the transparency. I mean, why don't we use blockchain technology to vote and make that a global standard that if you're not using blockchain for voting, you probably have something to hide. I think, so I'm a huge fan is what I'm saying of the technology and where it could go. Some of the things that I worry about. So blockchain is not that new. I mean, it's certainly new-ish compared to the Iron Age and electricity. It's new-ish. But being new, one of the things I really think about is what we call obsolescence risk. So, for example, we had a protocol called Hypertext Transfer Protocol. We still use the protocol today, but Netscape is nowhere to be found. We have SMTP as a protocol, and we have all this, but no one hears "you got mail" anymore. In fact, a lot of people aren't even old enough to know what the hell I'm even talking about. Napster is an interesting thing. 8-track tapes, CDs. I mean, CDs, I remember when I was in college, I was one of the first guys that got a CD player, and all my teammates on the basketball team were like, what? This little thing, all these songs on this? And my kids are laughing at my beat-up old pickup truck down on the farm that has a CD player in it still, right? Bitcoin's kind of the first iteration of this. Why doesn't a better mousetrap just, isn't it quite probable, not possible, probable that you and I, 30 years from now with AI and all the things AI will invent, that there'll be a technology either superior to blockchain or a version of it that's far superior, where leverage like, okay, the risk, you're a risk manager as a trader. It's not the risk you can see coming that you got to protect against. It's the risk you didn't see coming. And so I think about the nature technology. Is Bitcoin going to be talked about like word perfect processors and Quattro Pro in 30 years?
So that's a big part of the reason I wrote this book, Andy, Bitcoin Age. What I did is I described the origin of TCP/IP, the protocol that we use to transfer data packets around the internet, the origin of SMTP and HTTP, and how these are protocols that were built over the course of many years through an open source development process, starting all the way back with ARPANET, which was not an open source protocol. It was a Defense Department project that basically invented computer networking, but was the precursor to TCP, which is the protocol everybody uses to access the internet today. And so Bitcoin has a similar history to TCP. And that is one of the fundamental arguments of the book, is that we have created this protocol, Bitcoin, that is the culmination of perhaps 40 years of internet and cryptography development. And so that protocol that was invented in 2009 has the potential to last in a similar way that TCP is lasting today. And so the precedent for Bitcoin is TCP IP. And that is, I believe, and I make this argument in the book, it's the most similar thing that we have to Bitcoin in its decentralized node structure and in the way that the network effects keep people building on top of TCP, right? Because SMTP and HTTP both use TCP IP.
Yeah, we still use those. That's kind of my point, is the protocols are really have some longevity to them.
And Bitcoin Bitcoin is a protocol, though, Andy. That's the thing. It's not Netscape on top of HTTP. It is HTTP. It's actually TCP. So when we think about Bitcoin as the fundamental base layer of networked money, the blockchain that Bitcoin establishes, it's being locked in the way that TCP was when each node started to join the network and build things on top of it. So while it is possible another network protocol comes along and replaces Bitcoin, we already have about 15 years of empirical evidence to show how many competitors have tried and utterly failed to even come close to competing to Bitcoin. That's the thing. Is that you've had Ethereum. It's falling rapidly, and so we've seen early competitors rise and fall. And Ethereum is another one that's risen, and it's falling dramatically when priced in Bitcoin. It's actually collapsing in Bitcoin terms. So we have these attempts to reinvent Bitcoin, to improve it. But what are people discovering? That actually Bitcoin already solved the problem of decentralized trust with blockchain. And blockchain has become a generic term, Andy, but really what blockchain is, it's a chain of blocks.
It's a ledger. Yeah.
It's a chain of blocks. And the blocks are Bitcoin transactions, and the chain is Bitcoin mining. So blockchain, it's been stolen away from Bitcoin to describe other things. However, the word itself is based off of a chain of blocks. The word block means a Bitcoin transaction set, and the chain is the hashing process of Bitcoin mining. So both parts of that word are Bitcoin-derived words. They're brought in by the Bitcoin protocol, and actually blocks of data themselves were used to describe data packets in the development of TCP IP in the 60s and the 70s. So all of these topics I talk about in the book because I want to show you and others that Bitcoin, it's not just one that will be obsoleted soon or is likely to be obsoleted. It's actually likely to persist for half a century, given what we know about previous network protocol development?
So a lot of my mentors, and including one of the most trusted teachers I have in Robert Kiyosaki, I've studied and pretty much drunk all the Kool-Aid he's ever poured for me. And he's a huge Bitcoin fan. Me, I've stopped buying it myself simply because, as I've thought about it, I'd rather earn it than buy it. And what I mean by that is, what I do know is value is about trust. So let's say I go to Costco on Saturday and I watch the flow. I'm always a big fan of cash flow. I think cash flow is better than net worth. And I watch the direction the cash flows. And the people who produce collect the cash over and over and over again. You have COVID come out and they write everyone a check because they're struggling. And what do? They give it to producers. Someone goes to earn a paycheck and they get that paycheck, and what do? They give it to producers. So, my philosophy of building wealth is about work that produces value for people, and then they'll give me things if I give them things. And currencies allow us to do that very effectively. So whether it's a gold coin, if all of a sudden everyone says we're going to the gold standard, well, if I have a real estate property and my renter wants to stay there and I decide I want gold because everyone else does, I'll say, you're going to start paying me in gold. Right now, I have them pay me in dollars. But if Bitcoin becomes a thing, then I'll say, hey, I only take Bitcoin now. So to me, I don't think the way to get wealthy, let's say you wanted a lot of money. Would you go out and buy a lot of cash? Or would you buy a golden goose that would produce cash? Bitcoin mining is a dead venture because that's going to end someday. So there's no money, there's no future in Bitcoin mining because it's going to stop, right? Someday you're going to say, well, that's it, no more gold in the mine.
No, that's that's not actually. Let me say that.
Well,
Bitcoin,
it's an infinitely. It's like cutting a piece of paper in half. You'll always have a piece of paper left.
It's actually not, Andy, and I'll explain to you why. Even though the amount of Bitcoin that are being mined are going down, the dollar price of the Bitcoin mining reward has gone up over time, and there are Bitcoin mining transaction fees in those blocks that are collected by miners that should and will sustain the network even as the mining reward
that is true.
Keeps falling. So there are game theory solutions to some of the
similar to gas.
Yes.
Yeah, similar to gas.
Sorry to interrupt, but I wanted to specify that about Bitcoin mining.
That's true. A little bit of gas. But to my question is, wouldn't it just be okay for me to buy assets that produce goods and services and say, I'll take Bitcoin, and that way I don't have to gamble by buying Bitcoin and hoping it goes big, or if it crashes, I can just say, look, I have the power because, well, I'll give you an example. If I were to ask you to show me your Bitcoin, you'd probably pull out your phone from my Apple stocks that I own that I sold you. And then you would turn your phone on with the electricity that my utility company provides you. And then you would, find the Bitcoin through the AT&T network that allows you to see it through my AT&T stock that I own. And you might even use Coinbase, which I own. And so, I'm fine to own all that stuff as long as you guys want to use Bitcoin and buy my stuff. I'm a big fan. So tell me about what is wrong with a guy saying, look, I don't need Bitcoin. I can buy a business and provide value. I can make money in real estate, use debt to do that. Why would you tell me to buy a Bitcoin if I could earn one?
It's a great question, and I believe that you're presenting Bitcoin in the right framework of other assets. So one of the arguments I make in the book is that I believe Bitcoin challenges real estate and cash, specifically those two asset classes, as stores of value. Obviously, you mentioned how cash disintegrates unless you have it in the appropriate money market fund. And even then, you might not be getting enough yield to compensate you for cost of living and inflation. Et cetera.
Yeah.
And real estate, while real estate can produce cash flow, right, in terms of rental income, many types of income can be produced from real estate assets. real estate has costs associated. So you have carry
For
costs,
sure.
and the cash on cash return might not always be reflected in the income return or the yield of the property itself. So I believe I believe real estate, which has grown to between $300 and $600 trillion in global wealth, that asset class, much of the capital held in real estate is not put there for that pure income generation. A lot of it is put there for storage, right? Because people know that at least the price will go up or the value will go up over time, even if I'm not getting a ton of rental income or even any, that it's a safe place to put my money for the next 10 years, 20 years. I don't have to worry about this diversified real estate portfolio losing value versus cost of living around the world. And so there's an embedded store of value in the hundreds of trillions in real estate out there. I believe that's probably the number one source of people saying, oh, I'm going to put this in a digital store of value because this physical store of value has too many risks actually versus Bitcoin, which is, I view it as less risky, right? It's decentralized. So you don't have this specific property risk associated. So I believe that is the phenomenon we'll see. Equity, which is the participation in production and the selling of goods and services, which you mentioned, equity is a complement to Bitcoin. I don't feel that you should be owning no equity because then you don't have generation of cash flow, which is your point here. And so I believe equity, which is the participation in the production of the world, has a core place in people's portfolios, which is your point essentially that go out and earn Bitcoin. And so while some companies are earning in Bitcoin only, some are earning in both in Bitcoin and dollars, and most are earning in dollars only, I believe that will change and gradually include more Bitcoin accepting companies over time. But people, individuals, don't necessarily have to think like that. If you make $10,000 in income every month and $1,000 goes into your savings account and $9,000 goes for consumption, take that $1,000 in savings and split it between your cash and Bitcoin in whatever percentage you feel is appropriate. So as little as $10 or $100 out of your $10,000 income, just put that in Bitcoin as a savings account and take the rest of it, spend it on consumption and invest in other equities. And so you don't have to just keep Bitcoin only in your portfolio. It can be that long-term savings tool for you, a technology to provide you an online savings account, an online gold, and an online real estate in a way that, hey, if you have $1,000 at the end of the month and you want to put that away, buy some in stocks and put some in Bitcoin and call it a day, right? You have your rainy day fund, which is cash, and you're investing your cash flow into more equity to get more cash flow in the future. And then whatever your savings percentages of your portfolio, some of that should be dedicated to Bitcoin if you're thinking in terms of where has Bitcoin gone over the next 16 years and where could it go over the next 16 years. So I don't try to tell people go out and buy Bitcoin. That's not my message with this book. I give you a history, a framework for thinking about Bitcoin and the dollar system coexisting. This whole idea that Bitcoin becomes the world reserve currency and replaces the dollar. Whether or not that's the case, it's definitely not happening in the next 20 years. So why even speculate about it? I want to help people today, right? And today I believe that credit and the issuance of credit, people borrowing and banks lending, how does that go away? How does a couple that earns well go to a bank and say, I have future income, let me buy a house today? The bank says, well, I'll profit in the future. The couple says, I'll pay you back in the future. Everyone's happy. The couple gets a house. Does that system die tomorrow, Andy, or in 10 years because we have Bitcoin? I would argue no. And so I tried to explain that coexistence.
I think the coexistence, I mean, gold still coexists with
That's
dollars.
Right.
silver still coexists with gold.
That's right.
Those things still coexist. Just to give a shout out, Bitcoin Age Layered Money at Amazon.com. Get it. I know you're pressed on time. You got a flight. You got a couple questions left in you?
Of course.
Okay, fantastic. You mentioned understanding it in the context of assets. The other thing I would give a plug towards Bitcoin, if you think of it this way, when I invest if I look at my asset column, I'm going to have three basic goals for an asset. Or a combination of those. The first one, which is the one I don't like, the one I have a bit of a disdain for, I have friends at the Cashflow Academy that love this, I just don't like it, is I'm not a capital gain fan. I really have a hard time with the idea of, if you take a 6-year-old kid and you say, would you rather have a golden egg or a golden goose that lays golden eggs, which would you pick? And the 6-year-old kid would say the goose that produces the golden eggs. So if I buy an egg, I have to figure out where the price is going to go of the egg. And then once I decide I think it's high enough, I got to sell it. Now I have no egg. I'd rather, if I buy a goose that lays golden eggs and I take that egg and buy another goose and I take that egg and buy another goose, it just compounds easier to me. So I think the guys that are really good technical analysts can really do well with Bitcoin or gold or anything they want, Forex for that matter. The second one, we've already talked about production. And my thinking is when all the Bitcoin has been mined and you get that 21 million or whatever the number is, who's going to wind up with all the Bitcoin? Producers. It will find its way, just like cash found its way into the hands of producers. The Bitcoin will eventually wind up in the guy that sells ketchup at Kraft Heinz, the guy that sells oil at ExxonMobil. Once it's all out there, you're going to have to give it up to buy the things you actually do need: food, clothing, shelter, energy, communications, medicine. The third one where I think Bitcoin would have the best place is, you mentioned, as a hedge. If I have if I don't believe in equities or real estate or producing things, and I just want my rainy day fund and I want a safe haven of cash, if cash loses value, there's a real chance that Bitcoin could retain it, as you say. I recommend people learn about this. The dogmatism is the last question I have for you. Do you see dogmatism in crypto where some people say, hey, this is new, this is awesome? And I guess what I'm saying is, if you come to me as an equities guy, I can tell you what's wrong with equities. I can tell you that it's flawed. I can tell you can lose your shirt. I can tell you can go bankrupt with equities. Options even worse. So as a guy who trades stocks and mostly invests in stocks but trades options over the top of those stocks, I can give you 1,000 reasons how you can freaking get annihilated in the stock market, which is why you need education. I have yet to have a guy tell me that Bitcoin could annihilate you, because they become dogmatic and everything is good and perfect and there's no problems, and I'll throw all these hard balls at you guys, you just knock them out of the park one after the other. Is there a dogmatism around Bitcoin where, like, if I went to my friend Kenny McElroy and said, what's wrong with real estate, he could tell me? Because in order to be successful in your asset class, you have to know its pitfalls and where it bites you in the butt, or you're going to lose your money in asset class. Or is Bitcoin, okay, it's got this longevity, it's got this scarcity, it's going to be accepted and never go away. So where's the downside?
Yes. So
or is it a dogmatism?
No, there's a lot of dogmatism in there, and I would say especially from people that are forecasting Bitcoin becomes the world reserve currency sometime in the next 10 to 20 years. I think that's overly projecting of where Bitcoin can go. What the big downside to Bitcoin, and remember, for stocks, you have at least a century of data from the US perspective, and you have hundreds of years of data from a lot of different asset classes. Bitcoin, it's only been alive for 16 years, and it's really only had a price for 14 years. And so you don't have a lot of data. What we do know is that on a trailing 3.5 year time horizon, essentially all Bitcoin positions become profitable. And for a while, it was nobody that's ever held Bitcoin for 5 years loses money until 2022 November, when the price was at $17,000, below the price where it was in November 2017, which was at $18,000. And so even that hold for 5 years and you'll never lose became untrue at one particular moment in November 22. Now, Bitcoin has, 5x'd since, or 6x'd since that moment, but the volatility of Bitcoin is blinding. And so when you really want to take advantage of Bitcoin, from my perspective, it has to be over this 8+ year time horizon, where the empirical data is that you can actually make 100x on your money if you can hold for 8 to 10 years. But if you can hold for 3.5 years, you'll likely be in profit. But you can still have times where a 5-year holding period can be negative in Bitcoin. And so don't just think Bitcoin, which I talk about. I believe Bitcoin's going to $1 million per coin, which is 20 trillion in market cap. It's only half the size of the US Treasury market and less than 1/10 the size of global real estate. So it's not that dramatic of a prediction. Bitcoin to $1 million from 90,000 today. Man, it can take a journey that would give people literal heart attacks, Andy. And so they need to understand that volatility is present. It can destroy you if you are thinking of this from a trading perspective. But if you make 10 grand a month and you put $50 a month into Bitcoin, you are not going to get destroyed. I believe that over an 8+ time year horizon, you will be very happy with that small savings allocation in Bitcoin as it grows its network size over time.
Go out and buy Bitcoin age layered money. The reason I like to bring, authors on that have written about it is so my listeners don't just listen to me in a vacuum, because, I make mistakes all the time. And it's so important for people to get informed and learn from someone who has a good background, who obviously understands the protocols, who's been in the industry, and get your take. Fantastic. Last one, we'll let you have the last word. Warren Buffett says he wouldn't touch it in a million years. Why are you smarter than he is?
I'm not, but I can see. I'm not.
That was maybe a little dirty. I take that back. I take that one back.
I can see the youth, Andy. I can see where people are going. There are likely somewhere between 200 and 500 million people around the world that already own Bitcoin. Most of them are young, and I'm betting on them and that network effect. I teach at USC Marshall School of Business, and so I have young students, and I see the interest and the understanding of Bitcoin and its place in society, and so I'm betting on the future.
I'm hoping you're right, because as I confessed, I do own some Bitcoin. I own some crypto. That goes to $1 million. I might just not have you back. I'll probably give you a big kiss. This is, and by the way, everyone, I want you to know this is the closest I'll ever get to being admitted to USC. They actually have a restraining order against me, because if I walk by that campus, they know people just get osmosis dumber. So delightful, Nik, wonderful. My guest is written Bitcoin Age Layered Money, and we do have a website. I'm going to bring that up on my screen. TheBitcoinLayer.com is the website. Get educated. Look, I really have a lot of humility in this. I threw some softballs, some hardballs, but I'll tell you, I'm still learning about it, and I'm not an authority on it at all. I'm an owner of it. So, and it's not like I have 20 coins, right? So it's really important that you learn from people if you're interested in crypto. One thing I do know, and I'll bet Nik agrees on this one, education is never a bad thing for an investor to have, and learning more is never a bad thing if you're going to get an asset class. And when people ask me, should I buy real estate? I say, what do you know about it? When people say, should I buy stocks? I always say, well, what do you know about it? And when people say, Andy, what do you think of Bitcoin? I say, what do you know about it? There's a chance for you to know about it to purchase a copy of Bitcoin Age Layered Money, and you'll learn about how Bitcoin works. So fabulous, Nik. I'm going to close the show. It takes a minute to upload, so after we close the show, and I want to properly thank you. But you've been watching and listening to the Cashflow Academy Podcast, where we try to make this a lot of fun, try to keep it simple, and make it real. We'll see you next time.